I've got the E-mini futures. There's a lot to be said for this, so thank you to the person in the chat box suggesting this. The story of the US stock market, particularly the S&P 500, is an interesting one, because once you get this, where you had this steady trajectory for a long period of time, after you take the big hit that was the financial crisis. Okay, so financial crisis 2008, you had the housing bubble, people borrowed and borrowed and borrowed like 100% of mortgages, it all went wrong. Okay, whack, down it goes. You went from 1600 roughly, about 900 points of a drop. Okay, more than half, big fall. Then the market steadily returns to long-term gains. Now, the US has a very powerful economy. Generally, stock markets over the very long term in major economies tend to rise, okay, mostly. And you've got the same thing now. The reason why I highlight your financial crisis is because with COVID, you had an extreme event where you went from 3,400 to 2,200, so almost halved. But nonetheless, the point is afterwards you get this growth. Okay. Now, always at the end of every bit of growth, you get that fall, you get that retracement, because the markets have to correct. And what I mean by correcting, or when anyone tells you the markets are correcting, they mean people are taking their profits because they've got money on the table and they want to bank it. Okay, because they don't want to wait until someone else dumps the market and thus dumps their profits too. So 50% of the drop of the move back, that was a 50% fall, but it comes over a longer period of time, and it takes time too. That was on all your inflation fears. That was absolutely going to occur. It had to. And now what's happening is you've got regained confidence in the market. Now, I would suspect that you are going to fall at some point on this, and therefore I'm short biased. You're on the third month up in a row. If you go on your weekly, it just looks ridiculous. And I said before, you haven't had this kind of move for ages without any fall. And that's exactly what you're seeing. So when the market does fall, I wouldn't be surprised if it's a large fall and you get a correction back to your key moving averages. Like I said, price always returns on major assets, things that are commonly well known or traded with large volumes. The MAs are what price always sees itself back to. That is a fact. That has always happened, and it will always happen unless you get some massive, massive change in the structure of the global order or global worldwide economy, if you like. So we're short biased, and we know at some point it's going to fall, but where is the question? And that's really what causes the debate. It's where, and therefore how, to trade it. Now, I'll tell you exactly how I am set with what we teach our members in our academy. Okay, it's quite simple. So firstly, this, all right, you've got over a 100% retracement. Price has returned more than 100% of the former move. So at this point, anyone who's held it long has got gains on the table. You know, if you're a large institution with lots of money, you've got profits there. Now, what do you think will happen when suddenly in the news, at some point, because remember it's inevitable, you suddenly get the rhetoric and speech saying that things aren't as good as say the Fed thought, for example, because after all, they've said so many times that the full effect of what they've done monetary policy-wise hasn't been felt. That means it's pending, okay? I think they're all aware of that, but lots of people are sleepwalking and they're not. And that's exactly what happened to the sleepwalkers there, okay? Whoosh. As soon as the negative sentiment comes in, you get a fall. Now, you haven't had the negative sentiment just yet, okay? But that is always how it goes before it comes in. Now, on the side of risk management and trading it for longevity, really, you've got to take into account, firstly, that you don't have any form of resistance now. Because you've got an all-time high, there's no resistance to go off, okay? So you don't quite have that price action part that you'd like. However, you can consider dropping to lower time frames and looking for those kind of reactions as an indication to where price will stop. Now, at this point, you've had rejection on this candle, okay? Sunday the 20th, so that was last night, more or less, as you opened. And you're still going sideways. That's because there's no market sentiment, okay? But like I said, there is only a certain amount of time this can go on until it falls. So at some point that is the fact here. That is the salient fact here. It's going to fall, but you've just got to do it in lighter size because you've got no reference anymore. You've got no resistance to use or go off. Okay, so just be very, very careful with that. So I'm short biased on it. I think it's going to fall, and if you're going to do that, I would just do a tiny size. And I wouldn't be surprised whatsoever if first you come back to here and then you break through your levels. And then what happens commonly in markets is you start to deviate under these moving averages to the other side. Okay, so the moving averages will start to curl over. You'll come under the moving averages and then you'll hit your next level of support. Then the market goes up because people buy, or investors, traders alike. Then you go down and so on. Okay, that's how a downtrend forms over time. Now, there'll be many people who think the stock market of the US is going to go up and up and up forever. Now, I don't doubt it will go up at all. I don't think that's not the case. I just think at some point it'll come down first and then up and then down and then up, because that essentially is exactly what happens in these markets. Okay, you've got to understand that that is how markets basically work. In a short sentence, they come up for a while and then they go down. Okay, so yeah, that's your S&P. I guess more or less what I'm saying is I'm short biased. I would like it down to about 4,630 before I consider buying anything. It's just too high for me. Like I said, I think long term it will come up. I do believe that, but I don't think it's going to come up all in one go. I don't think that is going to be the case. And as I always say, if you look at the last time you had consecutive months that high, okay, it will be without any red candles. It will have been here, 3643, all the way to 455. Okay, 900 points straight up. All right. Now, you have gone from the low of last month all the way up here now, which is about 760. So you're not far off the largest rise in this period. Okay, now bear in mind as well, this came off the back of a massive fall, so it was justified. This is not a particularly big fall, and the retracement you saw last was not a big fall either. Okay, it's just the fact that you came to key support and key moving averages early on. Hi, Rita, great to see you. Rita's Academy member in the chat box. Shaniraj, are you referring to a ticker specifically or something else, Investco? Right, okay, so I see what you mean. I'm short biased on. I don't trade this particular ticker and asset, but you can see it's basically, well, it looks somewhat like the S&P. I would still be short nonetheless. But again, you've got no short reference via resistance, so you just need to be careful if you're doing that. And if you want to talk about the US100, same thing. Short, like I said here, dip back, pull up, and I think ultimately you'll come down. It's just a question of when, and the only way to sort of predict when a stock market is going to fall, or in fact, you don't need to predict when it's going to fall. All you need to do is trade a light size and spread it out, because it doesn't matter at that point when it falls. You're not going to be margin called. Okay, if you trade so big that you can't deal with 1,000 more points, for example, because it could go, let's say, 18,400, then you'll get wasted and blown out. So we just trade minimal sizes across a diverse portfolio, because that allows us to control risk at all time and not panic, particularly if things start to move quickly. I'm going to cover. Oh gosh, yeah. So you really need risk plans if if that is the case. You've got to be so careful, because that is so early on and such a big loss for how far it's gone. I would highly suggest our live trade room underneath, because we basically fix risk management plans for everyone, more or less. It's basically what we do. But if you've gone up 600 points and that is your cost, I mean, if it goes up another 1,000 points, it wouldn't surprise me. I don't particularly think it's going to happen, but I'm prepared for it to happen. And if you're never prepared for that kind of thing to happen, you will always, and I mean it, you will always lose all of your money trading. It will go at some point. It's inevitable, because at some point the loss will be too big. No matter if you make money beforehand, at some point you will give it all back. You've got to have risk management plans. Okay, it's